So I think we are going to learn some really cool lessons today through practice. Okay, I think we're live. Hey guys, welcome. This is our first Real Estate I2 talk for year 2019, and we want to give you guys some really cool content today. So a couple of items. We are going to talk about how to find and analyze a deal. In, I think, the next 15 to 20 minutes, we're going to do that. And then we'll also talk about the real estate deals update. Right, so we have two segments. The first segment is looking at the how to find deals on the market, and the second segment is looking at the general market in Texas. Where are all the deals located? So both are very insightful for us as real estate investors. So let me just organize my desk a little bit, and I would like to share with you how to do that. Okay, all right, so I got the email set up here, but let's open up a new window. And let's open up our Real Estate IQ platform here. How do we find a deal? And we're gonna really analyze the deal here. So for this, let's find a deal on MLS Deal Finder. Now, in general, there are different ways where you can find deals. You have deals that are on the market, on the MLS. So those of you that are looking at houses on Zillow, on Trulia, or kind of Realtor.com, those websites, you are actually you're seeing the houses that are for sale on the market, and it's being sold and listed by real estate agents. So we call it the MLS market. That's the biggest market out there in Texas. If I were to add up the numbers, we probably have about $80,000, 80,000 properties out there that's for sale and active in the Texas market right now. 80, maybe a little bit more, 80,000 properties. And so a lot of properties, and there's a lot of ways where you can sift through all these properties and find really good investment opportunities for you. And so here, MLS Deal Finder is a really easy way to do that. So we're gonna take a look. And another way, let me just finish this conversation. One way is to find it on the MLS. The other way is to look at these deals that are off market. And when it's off market, these are people that for whatever reason, one reason or another, they are motivated to sell their house. And so there's a lot of what we call off-market leads data, and we want to have access to these motivated sellers because as investors, what we're looking for are opportunities. If we have an opportunity to purchase the house, the low market value and a good margin, we're gonna be able to make money on that deal. So we're always looking for these deals. MLS is one of them, and we're gonna look at this one as an example on how to find deals. Okay, so that's the introduction. Here, let's pick a lucky county. I feel that we live in Dallas, so we have, I would by default go into Dallas. We're always finding deals and doing the real estate deal of the day as a daily email. We send it out to the folks that subscribe to that newsletter. And so we're always looking for deals. And my duty here is to look for deals in the Dallas-Fort Worth area. And so what we are looking at here are all the deals that a computer has found that could be a very good investment opportunity. And so here we have all these houses. All of these houses are fantastic. And each one is telling us that, hey, this is a real-time opportunity. The computer has looked at every property that's on the market. It's running a valuation on each property, and we have a very sophisticated model that can do a very, very good job for us. And so from that standpoint, we have the ability to find these properties, and all of these are opportunities for us, and they are color coded. So we have the green color that are houses that are active, and then we also have the red color, which are houses that are pending. We track all these houses that are on the market as long as they are still active before they get sold. Because when, a lot of the times when you find these properties, when it becomes pending, you may think that it's going to get sold. Sometimes it goes back on the market. The contract fell apart. So we track the property all the way until it gets sold. So anytime throughout that stage, in the different stages of the house from being on the market to about to be sold, we're tracking every stage. And if it comes back on the market, we can find it. So here, okay, so that's one, which is when it comes back on the market. Also, we find houses that are, if they drop in price, we can also very quickly capture that information, and we can also find all these are very triggers in our computer system, and when it triggers it runs the automated comms on the property and gives the signal to us that with a pretty high fidelity that it might be a very good opportunity. Obviously, if it's a new property, it just hits the market. It's also a very, very big trigger. So we can find the houses really quick as soon as it hits the market. We always say when it comes to the MLS deals, speed is going to get you the key. And so here, having a computer system finding these in real time is just a fantastic setup. So let's look at a deal. We have all these houses. We can find them and click on them. Or you can also see these properties over here. I like looking at tables. I'm a little more of an engineer. And so when I look at these properties, we're seeing these houses. It's a first picture of the house that gets posted on the market. And then we have the address. We're going to click on the address in a little bit, and it will show us the analysis on the property. The MLS number, you can also see the private remarks here. It's telling us it's a great investment opportunity and sold as is. A lot of keywords we can find. There's bedroom, bathroom information here. You also have some of the HOA information, the house information. We have put a lot of thoughts into organizing all this information so that as an investor, we can get a lot of information to make a very good decision, a very thorough decision. You have the days on market. The CMA date tells you when the computer ran that valuation. And then based on that, we run two kind of valuations. Let me just do this also. Let's highlight our point here. When we run a valuation, we find two valuations. Number one is how much you can lease it at, and number two, how much you can potentially sell it at. Each of these are based on the CMA or comms that are done on the property, and this is all done by the computer, of course. And we're going to go and check the computer's work and see if they make sense. But with the estimated price, that's our ARV. That's our after repair value. So if you compare these two properties, the difference is how much you can potentially make. And that's fantastic. The computer is doing 95% of that work, and it looks like an opportunity, and now I can pursue it very easily. Then on over here, you also have the estimated monthly lease. If I just go turn it into a rental and rent it out, you know, how much can I get, and what is the rental index of this particular property? So we can search by rental index as well, this number, which tells us it's a measure of your monthly income should you send it out as a rental property. So we have two extremely important numbers or metrics. Number one is the rental index. It measures the amount of cash flow you can get from owning a property and renting it out. Now, of course, this is before we factor in the costs of fixing up the house. So the number is going to change as you analyze the deals more. Then over here is the estimated discount. So discount is very good because the bigger the discount, the better the deal this property is. And so with this estimated discount percentage, now we can filter through the discount as well. And let me just explain a little bit about discount for those who may be not familiar. If it's at 46%, almost 47% discount, it means that if it's $100, I can buy it at $53, right? So you're getting it 53 cents to the dollar. There are two lingos. Some people say discount or equity. Some people say how much, 60 cents to the dollar, 53 cents to the dollar. It means if it's worth a dollar or $100, I'm gonna get it for $53. Okay, so looking at these, we can decide which property I want to look at. This one already told me it's a good deal, and I'm sure the comps is gonna confirm. And then this one may not be, and this one, it says yes. So it's really easy to take a look and figure out which property this is. Let's look at this one. So this one, what's attractive about the first property is that there's no photos taken on the property. Usually, if it's an investment property, the listing agent is not going to have put the time to take all these pictures, and they're not going to spend as much time for investment property. That's motivated to sell. Let's face it. And so they don't do as much work into taking pictures and stuff, and so that's a very good sign. That's an investment opportunity. We are looking at this table now, and this is the comps table. Okay, the addresses and the property is here, and it's also showing up on the first row of this particular table. The first one is always that subject property. That's the house we're trying to analyze. And the rest of these from 1 to 12 are the comps that is around the area. These are the transactions or the houses that were sold that are in that area and that are similar, very, very similar to the subject property. So here, the computer has chosen number 1, 2, 6, and 12 as the comps. And this valuation, the estimated price of $153,977 is based on the ones with the check marks. So let's click on recalculate just to bring up all the comps. And we can use that as the basis to kind of analyze the property. Okay, so now we're seeing all these 4 properties all stacked up together, and a lot of information on here. So we have the remarks. These are the remarks of these properties when they were sold. Right? All kinds of data here. Amazing, amazing amount of data. Then you also have distance, which shows us how far it is from the property. So this one is 0.01 mile away, which is probably like right next door. And then we got this one. And when the table pops up, we call it our secondary table. It will also show us the address of all these properties and the days on market and all that good stuff. Recency. This is how many days the property was sold. So this one, let me say it again. Recency is how recently the property was sold. And so if here it says it's 59 days, it means it was sold 59 days ago. And the next one is sold 81 days ago, etc., etc. As investors, we want to pick, we try to pick recency as close to the present as possible, because even though we like basing our valuation from history numbers, historical numbers, when it's too far away, it's not as relevant. So if it's within 3 months, 90 days, it's fantastic. But if it's from 180 days, 6 months, it's not as good, but it's still very good. We usually, when we first set this up, we want to go no further than a year. And here we have subdivision. So subdivision is fantastic because it tells us, okay, so the key thing that I want to share with you is that houses that are in the same subdivision tends to be built by a similar builder, and their valuations are very similar. So when we're picking comps, we tend to like to pick the same subdivisions. And here you see that number one has the same subdivision, but the other ones are not. And you may be asking, well, what's going on? You know, these are not. So what we're going to do with these check boxes, we can always check these out and pick the ones with the same subdivision, or pick whichever one based on all of this data. You know, you can look at all of them and then make a decision. And the more you spend learning how to look at all this data, the more successful you're going to be in evaluating properties. So preferably, we want the same subdivision. If it's not in the same subdivision, I try not to go outside. But you know, sometimes even if it's not in the same subdivision, the valuation is also very good. So it's always a case-to-case basis for investors. And here you have the school district. Okay, the school district is important, and the school names, very good when it comes to an exit strategy. And please keep submitting your questions. I see a couple of questions. We will address them in a little bit. And here you have seller type. So individual is just an individual homeowner, whether it's an REO or a lender. An REO is a bank-owned property. Then we know it's a very distressed property, and we probably don't want to pick it as a comp, because here we're looking to find the ARV, after repair value, and I don't want to use distressed properties to mess up the valuation. Then you have list price, sold price, year built. You want to stay within plus minus 10 years. Square footage, you want to stay within plus minus 20%. And we already put all this stuff in there. So, and that's why we are looking at these. And now we're looking at as close as possible to pick our best comps. Then we also have price per square footage. So here you can see the biggest, the most important column for me, you guys, is the price per square footage. The subdivision I pay attention to, the recency I pay attention to. But you know, the key thing is if I have properties in the same subdivision that are very similar, and it's selling for a much, much higher price per square footage, I'm going to be more excited, because now there's opportunity. Then you have bedroom, bathroom, how many stories, a lot of information here, and the information pops up when you put your mouse there. And if you put your cursor here, it'll tell you the lot size and lot description. So a lot of data. right? We're looking at a lot of data and analyze and figuring out how many comps there are. And for example, here, if I say, hey, I don't like number 48 because it's in Elmwood, and I don't like to use houses from Elmwood, I'm going to take that off, and I can replace it with something else. So just for demonstration purposes, I'm going to pick this one. It's Hampton Hills. I can click on recalculate CMA, and it's going to give me the estimated price. So now we're at $236,373. We have changed the estimated price, and that changes the discount, of course. Cool, very cool. We are looking at the data and pick the right comps, and now we have a number. Now, the data is one way of looking at the information. There's more ways. So we have created 3 views for you. We have the data view, we have the map view, and then we also have the photos view. So each one is going to give you a different perspective, a different viewpoint, and you can very quickly make those decisions. The really key part here is the data. There's a lot of data here, but everything is in a table, right? And it's very easy to digest. Once you get good at it, wow, I can analyze it. I can run a comp in 2-3 minutes, no problem. And if you use any of the other systems that are not as easy to use, I think typically 10 to 15 minutes to do one. Then here now from a map standpoint, we're seeing where they are. So the black house is the subject property, and number 1, 2, 6, 11 are the comps we chose. And here we see all the other comps on the other side of the railroad, right? And from here, I can also pick and choose. So for example, if I don't like this number 2, I take that off and then click on recalculate CMA. And now it's going to get updated by not having number 2. And we have a different value, 258,000. So we can always consistently refine how we pick comps, and we get those valuations. Then one more thing here is that we can do street view. So we can drag the street view, and we can virtually check out the neighborhood thanks to Google. We have a very good integration here. And so you can virtually check out a neighborhood, check out the cars in the area, check out the houses, a lot of information. All right, finally, we're gonna brand these photos view. We're gonna brand this somehow. I'm gonna figure it out. But guys, photos speak 1,000 words. And so nothing is gonna help you more by looking at these pictures really quickly. This is the main reason that professionals use our tool to run comps, because you can very quickly toggle from one picture to another, to another, to another, to another. And you can very quickly scan the house, and you can get a very good condition, an idea on the condition of the home. So we're the #1 company that have created this view, and now we can analyze these properties really easily. So from photos is fantastic, because now we're using this fantastic tool, and we can get a good assessment of the value. And it looks like number 6 and 11, they're not really good comps based on the quality. And now we're down to kind of only number 1, which is not good. We only have 1 comp. But what it's telling me is that if I fix it up to look like this one, number 1, that's in the same subdivision and it's a next door neighbor, I think it's probably gonna worth about this much, right? There is a risk value because we're only choosing 1 comp. And we may, ideally, I would probably wanna find other comps. But you know, this house here set the market. It just set the person that bought this property and turned it into looking like this, just set the market. in terms of the condition of this neighborhood. Fantastic, good for them, and they were able to sell it for a very good price. Let's look at how much. Let's see, it sold for $273,000. They asked for $299,900. Very nice. So this flipper probably were able to make a pretty good profit. And here, you know, let's be nosy. You can see the public remark, and you can see the description of all these properties: recent foundation work, new roof. The backyard still needs work. A lot of possibilities. You know, it's very interesting. So this is a very good property, even though there's only one comps, and it's already pending. But we can see a lot of the other ones, and we can figure out, we can find these properties. What we recommend you doing is log on the system and look at each deal every day. Just consistently do it. Just set an hour every day. If it's a good deal, send an offer and keep sending offers that looks good. And just the consistency. Consistency is gonna help you win the deals. You know, it's speed and consistency. Okay, let me field some questions here. Okay, fantastic. So I got Dennis's question. Number one is, why will anybody list a property below market value? And we have a webinar about this, right? So there are a lot of homeowners in Texas, and not everybody is able to pay their mortgage. And you know, there's a lot of things happening to a lot of folks, a lot of life changes. So there's always a lot of motivated sellers, many different kinds of motivated sellers. And you know, watch our webinar if you want to learn more. Come to our deal finding trainings so that you can learn more. But there are all kinds of motivated sellers for all kinds of reasons, and these are the people that, you know, if they have to sell it on the market, it's going to sit for a long time potentially, and they need the money right now. And that's just one example. But anyway, the motivated sellers, they need the money. They want to get rid of the house, blah, blah, blah. Many reasons in someone's life that they would want to get rid of the property. And so instead of an investor reaching the motivated seller, the listing agent got to the motivated seller first. And the listing agent got to them and they tell them, well, you know what? If you need a solution, what we can do is to put it on the market. We price it below the market value, and we're gonna get buyers. So, you know, it's you can only real estate. You know, here's the key reason is that real estate is not a liquid asset. It is it's a non-liquid. And so, what did I say? I was gonna say solid. What am I saying? I'm such a physicist. Because it's not a liquid asset, that if you need to sell and cash out really quick, you have to price it below market value. So either they sell it through the realtor on the MLS, or they sell it to an investor. It's both below market value. You know. And this is always a war, a perpetual war, actually, between investors and listing agents. Listing agents like marketing to motivate sellers and turn them into listings, and investors like to market to these motivated sellers and turn them into off-market deals or wholesale deals, et cetera. And so it's always a perpetual war in their marketing, and somebody's gonna win some. There's always going to be a percentage of properties that get listed on the MLS, and another percentage that gets won by the investors. I hope that answers the question. The second one, how accurate is the sold price? So the sold price is 100% hourly update from your local MLS, and it is I would say 99.99% accurate. There are times the listing agent, when they sell the house, they punch in an extra zero and go, oops. But over time, but like the system is going to update it. The MLS, the really good thing about getting information and the multiple listing services, they're always updating this data. It's a governing body for real estate agents, and they're checking their work and they're making sure the data is accurate. And all this data has been extremely, extremely valuable for us to do all these analysis and create all these products. So we are very appreciative of the local multiple listing services. Fantastic, great question. Now I want to show you guys the real estate deals update. I will be organizing my my folders very soon. This year is my organizational year, and everything becomes very organized. So here we are gonna look at the Austin real estate deals update. So every month we track all the data, all the deals, both on the market and off the market, to understand how the market is doing. How is the market behaving? And from a deal standpoint, where are we more likely to look at deals? So we are doing this on a monthly basis. This is our December report for the Austin area. And we have 4 Mondays that we're doing these real estate IQ talks. So the first Monday of the month, we talk Austin. Second Monday, we talk about Dallas-Fort Worth area. Third Monday, we talk about Houston area. And fourth Monday, we do the San Antonio area. So so every month, every week, if you guys tune in, you're gonna see more and more cool information all over Texas. Where are all the deals? Okay, so let's take a look at all the information. And the format is that we will look at just really briefly kind of how the market is doing from a number of listing standpoint, and then we're going to focus on the deals because we are the deal finders. Where Real Estate IQ is the #1 deal finding company. So here we have, this is how we look at it. So new listings, let's start with new listing. New listings is how many properties are being listed on the market, right? How many properties are hitting the market. In the Austin area, in October, there were 3,200, a little bit over 3,200 hitting the market. And in November, it drops to 2,672. So that's a big change. There's a big drop in the properties that are hitting the market. However, comparing to the same time last year, there wasn't as much change, and that's understandable. So throughout the year, we're seeing the market being very active, and now there's a small correction where obviously everybody has their theories on how the market is going to grow. Is it going to keep going down? Is it going to do this? A small tip. Everybody is their own economist or economics experts. But one thing that we notice for sure is that there's a decrease in the number of houses because the market is slowing down in the past couple of months. But also, if we look at the active listings, which is the number of inventory, from October to November, there has been a drop of houses that are for sale right now, right? The active listing is the inventory, what's on the market right now. So there's a decrease, but also because there's a decrease of new properties that's hitting the market. Comparing to last year, it's still a big growth of over 10%. Next, we like to look at some of these key numbers just to see how the market is going. The first one is the price per square footage. We see a small drop in the median price per square footage. It has taken longer to sell from October to November. It has taken 4 extra days to sell these properties. And the month of inventory, remember we were just saying from the last slide that the inventory is lower. You can see that the number of months of inventory is also kind of coming low a little bit. So we like looking at how many months of properties are there in the inventory, because if it's 3, if it has 3 months of inventory, that means we're selling all these properties that we have. It takes 3 months to sell off all these properties. So the smaller the number, the smaller the number of houses are out there. Okay, so we're kind of seeing drop in price. It takes longer to sell, and the inventory is getting smaller, and also the new properties are coming smaller. That's kind of the general market. So let's look at the deals. So we're going to look at the MLS deals, and then we're going to look at the deals that are off-market motivated sellers. So here is the heat map for the MLS deals. We have from each circle that we see here is a deal. And the smaller the circle, the smaller the discount. It's the smallest one is from 10 to 20%, and the biggest one is over 40% discount. So here we're looking at where the opportunities are. It's pretty sparse in the Austin area in general. There's not as many deals on the market, I guess, historically speaking, but we're still seeing some concentration in the downtown Austin area. Next, we want to show you the count. So the number of deals out there. So the number of deals in the last month, we found 2 deals in Bell County. And in fact, if we look at the off-market side, you see that a lot of the deals can be found off-market. Travis, 90, and Williamson is 44. And talking about the amount of opportunities out there, the asking price, we have $50.5 million. If we add up all the numbers of asking price and comparing it to the estimated value, that's the collective after repair value, we have over $11 million of estimated profit. So a lot of opportunities in just the last 30 days. And here we are showing you a trend of the deals that we find. You can see it's got 3 bars for each month, so that you can kind of focus on one color and see the trend for each county, but also you can kind of see the general shape of the entire, from month to month for the entire Austin market. So you see a big peak in back in May, and now it comes back down. So these are the number of deals. Feel free to ask more questions, you guys. We love talking about questions. Feel free to ask us questions. We love looking at this data. We're pretty familiar with this data. Here, we are looking at the pre-foreclosure filings. And so what we're looking at here is the number of pre-foreclosures that have been filed in the area in just the previous month. And so each one is, so each region here is a zip code. And so the darker it is for these regions, the more filings there are. So the darker, the more opportunities. The darker, the more opportunities. And if it's not dark at all, there were no opportunities. Here we're looking at the count. Let me move some of my panels here of each county. Remember I said that there's a lot of off-market deals that can be found in Bell County. And here it is. We see 93 of them. And we found 140 in Travis and 64 in Williamson County. These are off-market pre-foreclosures. And in terms of the opportunities, we're seeing almost $28.5 million of opportunities in those last 30 days. So lots of opportunities, more opportunities than the MLS kind of opportunities. But guess what? All we want is one. If we can get one, if we get 2, we can get 3. You know, each one is a deal. We don't need to win all the deals. We can win If we win a couple of deals, we're very happy. Of course, as you continue to grow your business, you're gonna want more and more. You want to get more deals, but man, over $28 million of opportunities. There's a lot for everybody. So here, let me just explain to you how we calculate this data. So what we do when we find all these opportunities is that we will research on when they took out the loan and for how much. So based on that, we can figure out how much their unpaid balance is with an assumption that they have been paying their mortgage on time every month. And so that's our unpaid balance. And we will also find the tax assessed value, which is how much the county thinks is worth. So they only owe this much, and the county thinks it's worth this much. So these are our opportunities. These are all the margins that can be made as an investor. So that's how we found, that's how we calculated this equity. And here we also have a historical trend of pre-foreclosure filings. And so you can see it 1 month by month. There is quite a bit of kind of change here in Austin, which is a very interesting phenomenon. We're seeing May and June. June pops up quite a bit, and now we're seeing another spike in November and December. So those are kind of the trends that we're looking at. If you guys want to see more and receive all these real estate deals update as we pump them out, as we create them, please visit our website, just realestateiq.co/newbies. And I'm open for more questions. So one of the things that I was just reminded to share with you guys is that we are offering a 40% markdown on our deal analysis or deal finding suite products. If you guys want to take advantage of that, go ahead and email customer service at realestateiq.co and refer to hearing about this offer at the Real Estate IQ Talk today. And they will grant your ginormous 40% discount. Wow. So this is the tagline I have to share with you. Find your next deal with Real Estate IQ. We are the #1 deal finding intelligence company. So from an intelligence standpoint, we do a lot of these reports. We also do a lot of local deal finding trainings. The whole idea is to help everybody be very successful in as quickly as possible in this real estate investment business, so that you guys can keep growing your business and find your financial freedom. So we're doing that. We also do Geeks and Nerds in real estate. We do this for fun, and we like talking about technology. If you guys are interested in learning more about technology or discussing technology, we'd love to invite you to our Geeks and Nerds. It's monthly in Austin area, in Dallas-Fort Worth area, and Houston area. We'd love to talk to you guys. Technology is our passion. What else? And along with that, we also have a couple of really cool events and classes. If you guys are in the Dallas-Fort Worth area, we're having a pilot program right now where if you come to the event, you can actually receive a very big discount to go into these paid classes. And these are what we call pro classes. So these are taught by market leaders that have been here for decades, and they have a deep knowledge in these kind of subject matter. And they're going to teach a 1.5 to 2 hour class about the area that they are experts in. So very, very deep area. We talk about probate. We're going to have classes about notes, how to invest notes, buying and selling notes. We're going to be talking about how to, if you're a rehabber, how to do fix and flip. If you are interested in wholesaling, how to do wholesaling. So we have all of these master classes on how to use our tool to be successful. And it's taught by market experts. To me, the most important thing about going to these classes is being really close to them, and you can ask real-time questions from these experts. It's very hard to find time on their schedule, and it's actually quite a lot of investment for us to put all these classes together. And but we want to bring it to the market because it's going to add a lot of value to your growth as a real estate investor. And the more successful you guys are, the more successful you're going to be. We're going to be. So look out! It's on Wednesdays at the Quest Trust Company classroom. We're going to have it pretty much every Wednesday, and all kinds of really cool information. If you guys are interested, or if you guys are in other area, we're looking into moving these classes and duplicating them once we work out all the kinks in the system. In the meantime, feel free to send us an email at mailback@realestateiq.co. This is what we're gonna do. The more emails that we get from one area, we're gonna prioritize on moving there first. So your emails is gonna count as the vote. That's all I have for you today. If you guys have any questions also, feel free to send it to mailback@realestateiq.co, and we can answer your questions in our next session, which is next Monday at 6. Okay, cheers. Thank you very much, everybody.